SoFi continuing that M&A streak that we've seen recently. The fintech company announcing plans to buy Technesis. That's a Latin American-based software company for $1.1 billion. The move helps position SoFi as a full-service bank and lets it control more of the back-end technology. It's an all-stock deal, SoFi says, should add roughly $800 million to the top line and about $85 million in cost savings over the next 3 years or so. SoFi became an FDIC-insured bank after buying Golden Pacific. It also bought another software company, Galileo Financial, a couple of years ago. Shares are down more than 8% here after that news. Year to date, shares down more than 30%. Back to you.
Kate Rooney, thank you. Anastasia, I want to get your thoughts on this because in addition to SoFi specifically, it does speak to how much competition is in the fintech space and how much the lines are blurring.
There is a ton of competition in the fintech space, and we see that in the public markets, we see it in the private markets. And the reality is it's going to be really difficult to win if you have a standalone app, if you have a trading app, or if you have a banking app, because there's so much competition. But I think what a company like SoFi is trying to do, they're trying to create a platform and an ecosystem that essentially is a super app. And what is likely ultimately to win in fintech is who has the ecosystem and who has the scale. So I agree, Morgan, that we're going to see more consolidation within fintech as we build out the super apps. And I think the beneficiaries of that are going to be especially private market companies. So, for example, only 3% of fintech is publicly traded. The rest of that is in private markets. And if you look at the global unicorns out there, about 25% is in fintech. So it's a very fertile fishing ground, I would say, for companies like SoFi looking to have these bolt-on acquisitions. So, by the way, everybody wants to be a neobank. Everybody wants to invest in one and bank with one. But what these companies have to figure out is how to actually make money and how to have a profit margin. They haven't done it yet, but scale might be one way to do that.
If we take a quick look at this 1 year daily chart, it did try to break above $24, couldn't break this resistance. We did try to break it back in April as well. Came back down to a very strong support, and we broke down that support, unfortunately. We did hit a low of 10.19. This creates a very good opportunity for long-term investors. We don't know what's going to happen in the short term. We have rising interest rates. We have the situation with Russia and Ukraine. So short term, it's very volatile. But we want to be thinking about 5 to 10 years from now. 5 to 10 years, SoFi is going to be doing well. I'm sure it's going to get above 24 again. But right now, nothing we can do but stay as patient as possible. And if we take a quick look at these options chain, I would highly suggest staying away from short-term call options, especially weekly call options. We don't know where SoFi is going to be tomorrow, Friday. And even though these are only 35 cents, SoFi can remain flat, which will cause these options to be considered worthless on Friday if SoFi does not go up to 10.50 or higher. What you can do is you can sell a cash secure put, receive the premium, and use that premium to buy shares of SoFi. So if we take a quick look at the 18 March, we have the 10 strike price or even the 9 strike price here. You would receive $70. I know it's not a lot of money, but you can use this money to buy shares of SoFi, or you can treat yourself to a nice meal. You do need to put up the collateral. The best way to go about trading or investing in SoFi is to just buy shares. But if you cannot afford to buy shares, what you can do is you can buy a call debit spread. So we're going to go to June 17th. We're going to buy the 12.50 strike and we're going to sell the 17.50 strike. We're looking at an $85 investment to potentially make a profit of $415. So as long as SoFi is above $13.35, we will be able to be profitable. This is a better trade versus buying weekly call options after weekly call options that just never hit, especially in the market that we are in right now. Let me know if you are buying this dip. This dip definitely creates a huge buying opportunity.